Hello, everyone. Welcome to another episode of Pure Perspectives. I am joined once again by Willis Richardson, co-founder of Pure Funding. How you doing, Willis?
I'm doing good. How are y'all doing?
We're good. I hear you're getting a little bit of a cold snap down there in Texas.
We are. They call it a winter vortex. The winter
Oh,
vortex has come from Canada.
I'm sorry. I'm
They're
sorry.
they're
As a
coming at
Canadian,
us. That's
this
as a Canadian.
this is the time of year we're always giving. We're a
Yeah,
giving
so
nation.
much, so
Yeah,
much. So
yeah.
no, it came down, and we if we had had rain on Wednesday, I think it would have stayed for 3 days.
Oh,
So
wow.
everyone's still getting around. There was a little bit of snow flurries today, but nothing's sticking to the ground. So
Good.
it's
Good.
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 Yeah.
Well, we are talking investors today. We're going to talk about investor products we have, what the differences are, and really what the advantage is for investors, really from a access to capital standpoint to continue to invest. So, um, our two main products for investors are DSCR and what we call fix and flip, correct?
Yep, those are.
Let's start with DSCR. How does DSCR work?
So a DSCR loan stands for debt service coverage ratio. So you are making sure that the new income from that property can cover or service the debt of the new property. So if the um, monthly principal, interest, taxes, and homeowners insurance payment, along with HOI, if there's an HOI on that property, the is $2,000, we have to see that rent is going to be at least $2,000 or more, depending on the product. We have some products that can go below that DSCR ratio, but you're hit with higher down payments, and you're hit with higher rates if you go that way. So we really try to
Got it.
steer away from that. So we want you to break even or be better, which I think most investors are saying, I don't want to buy a property and lose
Yeah.
money every single month.
And that's short
Um,
term or long term, right? Airbnb or,
yeah.
a month, a year long lease. It's the same thing, right?
Mhm. It's the same thing. Airbnb has a little bit higher down payment. We have to use AirDNA data to verify it.
Got it.
So we do try to get approval off of the long-term rent. And then if we can't, then we switch to more of a short-term rent analysis. So that's the flexibility of the product. So typically you're looking at 20% down on these. With Airbnb, you're looking at 25% down.
Okay.
And then you're looking, typically the rates come, you can do no prepayment penalty with these, but you usually get a nice benefit to your rate if you do a 1, 2, or 3 year prepayment penalty, which is different than what your conventional primary home loans have. So if you've always bought your primary home, you've never really bought investment properties, what you can do is you can get a better rate if you say, hey, I'm not going to refinance this rate for 1, 2, or 3 years. And the
Got it.
longer you keep the rate, the better the rate can get. So we typically do at least a 1 year prepayment penalty because you get a little bit of a bump, but that still gives you the freedom that if in 12 months the rates have come down, you can still refinance and take advantage of that. So, but yeah, so how the loan works, uh, how the loan works is we're just trying to make sure the rent is going to be more that rent is. And so we use a couple different things. If we're doing a long-term rent, we have to look at the rent schedule. So who provides that is an appraiser.
Okay.
So the appraiser to goes out to the property and has to appraise the property just like you do with most purchases. But while they're out there, they're also comparing other rental properties in the area to your rental property and then looking at how much they're renting out those homes for, and coming up with what we call a rent schedule or an appraised value of what that rent will be. So if you need your home to make $2,000 a month and every home in your area is renting for $1,500 a month, you probably don't want to go after that house. If you need to make $2,000 a month and every home's renting for $2,500 a month, you probably want to go after that kind of house. So there's a lot of flexibility there because of that, but that's where that number comes from. Now, if you're doing a refinance, we can look at the lease for the property and what you are currently leasing it for, and we'll take that into consideration. But typically, we still get a rent schedule from an appraiser when they go out, and we look at the lower of those two values. So that's
Okay.
pretty standard on how that's calculated. So.
How much does the experience of the investor factor in?
In some cases, on some of these loans, you can get a nice benefit to your rate or closing costs uh, with a more experienced investor, but all of these loans can be done with a first-time home investor.
Okay.
So down payment is going to be the same regardless of experience. Where you're seeing the benefit is some of the loans have lower closing costs for more experienced investors, or they have lower rates for more experienced investors.
Got it. Okay. All right. So that's really for the buy and hold and lease investors out there. When we think about people that are, buying, rehabbing, and flipping properties,
Mhm.
what type of products do we have for that type of investor?
Yeah, so we have our fix and flip loan, which is a pretty neat loan. Gary and myself have done one. We
Okay.
think the product's that neat. Basically, what it does is it gives you money to purchase a home and then money to rehab the home. Now, that's dependent on what the home is going to be worth afterwards. It's dependent on how much you put down and how much the renovation budget is. But how all those numbers work together is you can get 100% of your renovation budget up to 50% of the purchase price. So that means if you're buying a home for 200,000 and your renovation budget is under 100,000 or less, you can get 100% of that.
Wow.
And so you can use that money then to fix up the property. It's not enough money to buy a house, bulldoze it, and build something new. It's
Yeah.
really to buy a house, have a budget on what you're going to fix up, how you're going to improve it, and then turn around and sell it. Now, your down payment can go as low as 10%, but that is going to be dependent on how big your renovation budget is and what the after renovated value of the home is. So your entire loan, purchase of the property, minus your down payment, plus your renovation budget, has to stay under 75% of the after renovated value.
Got it.
So if it's going to be worth $400,000 when it's all said and done, the total loan has to stay under 300,000.
Got it.
So,
Got it. So really,
uh,
it's a very efficient way for this type of investor to access cash to do really multiple products at the
right.
time.
Right, because what typically happens in a fix and flip is somebody has to buy the house and maybe they get a loan for that, but they're going to
Hmm.
be putting 20% down. And then they have to fund the renovations. So if it's $100,000 and you're buying a $200,000 home to go back with that property, you have a loan on the property, you have 20%, so you have 40,000 invested in the property,
Hmm.
and then by the time your renovation is done, you have another $100,000 invested in that property that is locked into that property until you sell the property. Now, when you sell it, you're going to make your money and everything else. You're going to get back your money, but it is sunk into that property until it sells.
Big
It
cash
you
flow
can't
issue.
Yeah, big cash flow issue. But with our loan, you can go as low as 10%, and that is in the property. But the 100,000 that you spend to renovate the property comes back to you throughout the project. So it's you're reimbursed on a draw schedule with these type of loans. So you have to get some contractors or you yourself do the work. You spend $10,000. You contact the lender. You tell them, hey, we just spent $10,000. Here's the receipt showing that we spent it. Here's the lien releases from contract subcontractors if you used them, and then they send down an inspector to make sure the work has been done. Once they verify the work's been done, they will wire your $10,000 minus the draw fee to your bank account, and you'll have it within 48 hours from submitting your initial request for money.
Wow.
So it allows you to do $100,000 worth of work, but to only but to only be out of pocket 10,
Yeah.
15, 5, whatever you
Expose
want
a
to.
little amount of
Yeah,
money. Yeah.
you're exposed less. And when you get to the end, you've just renovated a home, and your only sunk cost in that right now is your down payment and your closing costs. And so you have a pile of money now that you can go out and do this again while you're waiting for the first home to sell.
Got it.
Potentially, depending on, once you have enough cash built up from doing a few of these, you could potentially do two or three at the same time. And so that's the real benefit of being able to leverage that debt to bring in not just one home that is going to profit you 20,000, but maybe three homes that'll average out profiting you 20,000 each. And you can complete them in relatively the same amount of time. That's where you really start to move the needle.
And then similar question to the DSCR, does experience, it sounds like experience matters more
Yeah.
here because you
Yeah, this
building a relationship with us and the lender, right?
So you will have lower closing costs and a lower rate once you've closed more than five renovation loans in the past 24 months, I
Okay.
believe is the number. So yeah, limiting factor on it for the fix and flip loan is minimum loan amount is 150,000 right now.
Okay.
That might be changing in the future, but right now it's minimum loan amount's 150,000. Now that's 150,000 for purchasing the home and renovation budget.
Yep.
So, yep. And the maximum I think is 1.5 million, I
Got it.
believe.
Okay. Is that, that's got to be regional, right? It's regional based. It's state by state, probably.
It might be. I'm not sure on that.
Okay. Interesting.
I'd have to look into that to see exactly. I know in our area it is. Our lender that we work with is in California, so it might be nationwide that's that max of 1.5.
Interesting. All right. So really, whether you're buying to hold short or long-term rental, we have a product there. Or if you are, a fix and flip investor looking to rehab houses, multiple products or projects at a time, we have products that will kind of help them go faster and
Oh yeah.
and realize the gains from selling the property sooner. So
Yeah.
yeah, very awesome. This is good information. I think people will appreciate that. I know, investors that are looking at rehabbing a house. And the big thing is, well, okay, I got the cash to go do the 20% down, but, I don't have 150,000 laying around for the renovation. So this definitely changes the cash flow equation and allows you to run a lot faster. Yeah, there is a draw process and that takes time, but the fact that you're not tying up that capital is a huge
Mhm.
differentiation.
Oh yeah, it's huge. It's a really really neat product that, like I said, we did our first one um, through this product, and it was it was a great process. And so I think a lot of people could get into doing it
Yeah,
through using that fix and flip loan. Long term ideas would be to start looking into building up your capital so that you can continue doing fix and flips or start buying multifamily properties to start doing long-term rentals.
yeah,
It allows you to cash flow in two different ways that way, because you're getting an asset that you can depreciate by buying like a long-term rental, but with multiple doors versus just one door, your ability to cash flow every month is going to be a lot more.
yeah.
But then you're also cash flowing through active fix and flips, and so it really allows you to build up a good foundation for real estate and investing in real estate.
Awesome. Well,
Yeah.
Willis, once again, a wealth of information. We thank you for your time. Hopefully, everybody found this
Awesome.
helpful. We'll continue to do product-specific videos like this in the coming weeks and months. So, hope you enjoy them. But for now, that's all for Pure Perspectives. Thanks, Willis. Have a great day.
You too. Thanks, Clark.
Thanks,
Bye.
everyone. Bye bye.